This lecture will conclude the scope of work for non-profit organization. From the previous lecture, we covered the theoretical aspect of non-profit organization, the subscription fee account, and the receipt and payment account. In this lecture, we will attend to the accounting treatment of entrance fees, trading account for fundraising activities, income and expenditure account, and conclude by preparing the NPO's financial statements. We will work through this exercise to prepare the following accounts: the entrance fees, the trading account for fundraising activities. In this case, we will be using the refreshments. Thirdly, we will prepare the income and expenditure account, which is a final account where all incomes and expenses are transferred in order to determine the surpluses or the deficits made by the club during the accounting period. In this exercise, the financial year end of Diners Club is the 31st of December. All transactions are strictly on cash basis. You are supplied with the following information extracted from their records. At the beginning of the financial period, January 2010, there are accrued subscriptions, 1,680, subscription received in advance, 960, refreshments on hand, 500, petty cash, 1,000, bequest Mashaba Fund, 2,220. Then a summary of transactions that took place during the year. We received subscription and banked 25,680, paid for stationery and printing, paid donations to charity, refreshments bought, refreshment sold, refreshment on hand. It's not a given figure, it should be determined. Entrance fees received, fixed deposit made during the year, insurance monthly premium of 110 paid for the year, 1,540. Coco sponsorship received 2,500. Book club affiliation fee 350. Honorarium in arrears 3,100. Sales of magazine marked at 40% on selling price 2,700. Rent expense and commission paid on sales of refreshments. Under additional information, 100 members were registered at the club at the beginning of the financial period, January 2010. 10 new members joined the club during the year. 2/3 of the entrance fees must be capitalized. Subscription fees amount to 240 per annum, irrespective of the date of enrollment as members. 5 members who were in arrears in 2009 paid their fees, while 6 paid in advance for the year 2011. The policy determines that the subscription fees of the members whose fees are outstanding for 2009 must be written off. All refreshments are sold strictly at a profit of 50% on cost price. Starting with entrance fees transaction, we were given that entrance fees received amounted to 2,500. Under additional information, line 2 indicated that 10 new members joined the club during the year. 2/3 of these entrance fees must be capitalized. The following general ledger entry will be made in the entrance fee account. As bank was debited with 2,500, the entrance fees was credited with the contra details of bank 2,500. Hereafter, a general journal will be drawn to transfer 2/3 of this amount to accumulated fund. We will therefore debit the entrance fee account with a 2/3 of 1,667, and the contra will read as accumulated fund. Then this account will be closed off with a credit total carried over to the debit side and the missing figure calculated as income that must be transferred to income and expenditure by means of a general journal. The income and expenditure will then be credited with entrance fees of 833. The next requirement of the exercise is to prepare the trading account for refreshments. Before we could do that, let us recapture on the calculation of gross profit. It is calculated as selling price minus cost of sales. To determine cost of sales, there are two methods that are used, being the perpetual inventory system where markups are given, or the periodic inventory system where we are given the following: the opening inventory, the purchases, the import duties, and from this cost element we will then deduct the purchases returns and the closing inventory, so as to arrive at the cost of sales or cost of goods sold, which will then be deducted from the selling price to arrive at the gross profit. In preparing the trading account using the periodic inventory system, the following cost element will be shown in the account as follows. At the end of the period on the credit side, we will reflect the sales. On the debit side, we will reflect the opening inventory, the purchases less returns, the import duties, the freight charges, and all other related costs to inventory will be shown on the debit side. And then again on the credit side, we will bring in the closing inventory. Then the trading account will be balanced and closed off by either determining the gross profit or the gross losses. If the credit side is bigger than the debit side, then the balancing figure will represent the gross profit. When using the perpetual inventory system, the trading account will be drawn as follows. The credit side will be the sales. The debit side will be the cost of sales after determining using the calculation on markups. Also, balancing the account will determine whether it's a gross profit or a gross losses. If the credit side is bigger, we will arrive at gross losses. Having done this revision, we can now proceed with the next exercise, which is to prepare the trading account for refreshments. These are the transactions that affected refreshments. At the beginning of January, refreshments on hand amounted to 500, while during the year, the refreshments were bought at an amount of 13,150, while the sales of refreshments amounted to 18,750. Refreshment on hand was not given. It's an amount that must be determined. Commission paid on the sale of refreshment amounted to 850. Under additional information, line 5 indicated that all refreshment are sold strictly at a profit of 50% on cost. This exercise tests our knowledge for both inventory system. For periodic inventory system, the following items were given: the opening inventory, the purchases of inventory, cost related to the sale of inventory, purchases returns was not given, closing inventory, it's an item that needs to be determined in order to arrive at the cost of sales. We will therefore prepare our trading account as follows. On the credit side of our trading account, we will reflect the sales of refreshment, the amount given 18,750. On the debit side, we will bring the following items. We will take the opening inventory, show it on the debit side. Purchases on the debit side 13,150, less returns if we were given returns. Commission paid on the sale of refreshment, also on the debit side 850. At this stage, we cannot determine the missing figure or balance the account because we've got two elements that were not given. We were not given the amount for the gross profit, neither the amount for the closing inventory. We will therefore use the additional information to calculate either of the two amounts that are missing. We are given that markup used for the sale of refreshment was 50% on cost. Therefore, if the cost price is 100%, our sale percentage will be 150. We are given the sales in rents. We will therefore use a calculation as follows. We will take the sale in rents, 18,750, divide it by the sale in percentage, 150, multiply it by 50 to arrive at the gross profit of 6,250, which will be interpreted in the trading account as income and expenditure. The account will then be balanced off to determine the balancing figure, and the balancing figure will therefore represent the closing inventory. Now that we've calculated the gross profit in the trading account, it must now be shown in the income and expenditure as an income item. We will therefore go to the income and expenditure account. Already it has on the credit side the entrance fees that we have dealt with earlier. We will bring the trading account on the credit side by means of a general journal as 6,250. The second requirement of the exercise is to prepare the income and expenditure account showing the calculations for membership fees. We will therefore show these calculations by presenting the general ledger for subscriptions. The following transactions affected the subscriptions. At the beginning of the period, we had accrued subscription 1,680 as well as subscription received in advance of 960. Then, summary of transactions that occurred during the year. Subscription fees received and banked 25,680. Under additional information, 100 members were registered at the beginning of the financial period 2010. 10 new members joined the club during the year. 2/3 of their entrance fees must be capitalized. Subscription fees amount to 240 per annum per member, irrespective of the date of enrollment as members. 5 members who were in arrears previously paid their fees, while 6 paid in advance for the year 2011. Lastly, the policy determines that the subscription fees of the members whose fees are still outstanding for 2009 must be written off. The ledger account will be drawn as follows for subscription fees. Starting with entries from the previous period. On the debit side at the beginning of the period, in the subscription fees account, we will reflect the income accrued 1,680. This entry is debited to avoid the duplication when the income is received in the current year. The subscription received in advance will then be credited, the amount 960. We are crediting the account to account for this income in the current year. Then we will bring in transactions that occurred during the year. In line 3, we have 5 members who were in arrears who now paid their fees in the current year. We will therefore calculate the amount as 5 times 240, show this amount at the end of the period as bank for 2009, amount calculated 1,200. Also in line 3, we have 6 members who paid in advance for 2011. Calculate the amount, show it as bank for 2011. On the credit side, 1,440. Immediately this amount must be adjusted from this account because it's income that must not be accounted for in the current period. We will therefore create an adjustment account called income received in advance, debit the account with the same amount, 1,440. Line 4 says that members who are still owing for 2009 must be written off. We will therefore compare the amount that was owed in the previous year with the amount that was received. The balance will be written off on the credit side as credit losses, amount calculated 480. We must now show the actual cash that was received for 2010. We will determine that by taking the amount that we have received for the previous year, add the amount that we have received in advance, deduct it from the amount that was deposited as subscription fees in the bank. And that amount will then be shown on the credit side as the current cash for this year, amount calculated 23,040. At this stage, we cannot close off the subscription fees account because we were not given the accrued amount or members, the number of members that are owing, or we were not given the total income that we were supposed to have received in the current year. We will therefore have to use the information given to either determine the accrued or to determine the total income that we were supposed to have received in the current year. If we are to determine the total income, we will do it as follows. We will take the number of members that were registered at the beginning of the period, add the members who joined during the year, deduct the members that resigned from the club, represented by the credit losses that were written off. We have written off 480 divided by 240. It will give us the 2 members that have resigned. And then it will leave the club with 108 members that are now registered in the club. Multiply it by 240 to arrive at a total income of 25,920. Show this amount on the debit side as income and expenditure amount 25,920. Now the account can be closed off by showing the balancing figure as accrued income. This calculation for accrued income can be tested by taking the total income for the year that we've calculated, 25,920, deduct the actual cash that we have received for 2010, which is the advance that we received last year, plus the cash value that we received in the current year to arrive at the amount that is owing of 1,920. The income that we have calculated now as income and expenditure in the subscription fees account must be transferred to the income and expenditure account. Already we have transferred in the income and expenditure account the trading account from refreshment as gross profit, the entrance fees as calculated in the entrance fees account. We are now bringing in the membership fees as calculated in the account 25,920 on the credit side. We will therefore also bring in the expense credit losses on the debit side, 480. Before we can conclude the income and expenditure account, let us look at the following adjusting entries which must be considered before finalizing the account in order to draft the financial statements. For the NPOs, we have 2 financial statements, which are the income and expenditure and the financial position statement. The following are the adjusting entries. Where income is received and exceeds 12 months, the overlap is treated as income received in advance. In the income and expenditure, it could be an account or a statement. The excess income will be excluded, while on the statement of financial position, the excess income is income received in advance and it will be treated as a current liability. Where income received is less than 12 months, income owing is treated as accrued income. In the income and expenditure, the income owing will be included, while in the statement of financial position, it will be accrued income treated as a current asset. Where expenses paid exceed 12 months, the overlap is treated as expenses paid in advance. In the income and expenditure, the excess payment will be excluded, while on the position statement, it will be shown as prepaid expenses treated as a current asset. Where expenses paid are less than 12 months, the amount owing is accrued expense. In the income and expenditure, the expenses not yet paid will be included, while on the statement of financial position, the accrued expenses will be treated as a current liability. For consumable goods on hand, in the income and expenditure, they will reduce the expenses, while on the position statement, they will be shown as consumable goods on hand, treated as a current asset. Membership fee written off, we've already seen that they are treated as a credit loss expense in the income and expenditure. To conclude the income and expenditure account, we have to bring in outstanding transactions that were not included while determining the gross profit from the resale of refreshment, or the calculation of the entrance fees, or the membership fees as calculated in the subscription fee account, as well as the credit losses. When presenting the income and expenditure account, we usually use the accrual basis. In terms of this base, we are including or considering transactions that remain outstanding at the end of the period. It could be expense not yet paid, no income not yet received that must be considered in the account, and deduct all expenses that were paid in advance or income that was received in advance. The remaining transactions of the exercises that hasn't as yet been recorded in the income and expenditure account are the following: stationery and printing, donations to charity, insurance paid, affiliation fee paid, honorarium in arrears, sales of magazine, which were marked at 40% on selling price, as well as the rent expense. This will be brought as follows in the income and expenditure account. We will show stationery and printing on the debit side, 3,400. Donations made to charity on the debit side, 1,550. Insurance paid monthly premium is 110. If we multiply it by 12, it will give us 1,320, reflecting that we have paid premiums in advance. And that amount is 220 that must be deducted because it's not an expense that was supposed to have been paid in the current period. Affiliation fees, 350. Honorarium in arrears, it's an expense that should have been paid, but it was not paid. Therefore, we will include it, 3,100 on the debit side. Then the sales of magazine, which were marked at 40% on selling price, we are going to reflect only the gross profit in the income and expenditure. If the selling price is given as 2,700 and markup is 40% on selling price, therefore the selling price percentage will be 100. We will therefore take 2,700 divided by the corresponding percentage of 100, multiply it by 40% to arrive at the profit on sales of magazine on the credit side of the account amount 1,080. Bring in the rent expense paid on the debit 4,400. Balance of the income and expenditure by calculating the surplus, which will be shown in this account as accumulated fund account. You will realize that in this account, we didn't include COCO sponsorship because it's not an operational item, it's a capital fund item. The three financial statements for NPO are the statement of receipts and payment prepared on the cash basis, the statement of income and expenditure presented on the accrual basis, and the statement of financial position. Starting with the preparation of the receipt and payment statement, we will first look at the preparation of the receipt and payment account, with the debit side reflecting the receipt and the credit side the payments. Starting with the opening balances, we were not given the opening balance for the bank account but instead for petty cash. We will therefore re-show the opening balance for petty cash with the receipt as petty cash brought down 1,000. The entrance fees as it was deposited, ignoring additional information, 2,500. Membership fees also as it was deposited, ignoring additional information, 25,680. The sales of refreshment, 18,750. COCO sponsorship, 12,500. Sales of magazine, 2,700. On the payment side, we will show payments as they were made through the bank. Stationery paid, 3,400. Donations, 1,550. Purchases of refreshment, 13,150. Purchases of magazine, it's a calculation. We were given markup on sales of magazine of 40% on selling price. Therefore, selling price percentage will be 100%. And cost price percentage will be calculated as 60%. We will therefore take 2,700, multiply it by 60% to arrive at the cost of 1,620. Insurance paid, ignoring additional information, 1,540. Affiliation fee, 350. Rent paid, 4,400. Commission paid, 850. The fixed deposit made during the year, 1,000. Then show petty cash closing balance with the payments, 1,000. Balance the account by calculating the balancing figure and reflecting it as a balance carried down, which will be shown as balance brought down for the new period, together with the petty cash opening balance on the debit side, also as balance brought down, 1,000. These entries on the receipt and payment account will then be shown on the statement of receipts and payment as follows. Starting with a heading showing the name of the club as Diners Club, the name of the statement as statement of receipts and payment, and the period under review, which is the year ending 31st of December 2010. Then the statement will reflect the two sections, which are the receipt and the payment sections. Then on the receipt side, we will list the accounts and reflect the amount as they were calculated and shown in the receipt and payment account. On the payment side, we will reflect the payments as they were reflected in the receipt and payment account. Then the statement will then conclude by showing the petty cash closing balance with the payments. Then the statement will be balanced off by calculating the closing balance at the end of the financial period, which will be shown as bank and the date of the financial year end. Please note that the statement does not conclude with balance carried down and balance brought down. The next statement is the income and expenditure, which is prepared on the accrual basis, meaning that when this statement is presented, it must consider the income and expenses to cover a full term of a financial period. This statement is usually presented from the nominal account section of the post-adjusted trial balance. Let's look at a trial balance for this exercise. Starting with the heading, the name of the club, the name of the statement post-adjusted trial balance, the financial year end, 31st December 2010. The trial balance must reflect the two sections, the real account section and the nominal account section. Starting with the real account section, where we normally reflect the list of accounts that fall under assets, owner's equity, and liabilities. Starting with the bequest as given with the opening balances of Mashaba Fund, the entrance fees as was capitalized, fixed deposit as reflected in the statement of receipts and payment, accrued income of membership fees as reflected in the subscription fee account, inventory for refreshment as calculated in the trading account for refreshment, bank account, which is a closing balance from the statement of receipts and payment, petty cash, COCO sponsorship as shown in the receipts and payment, income received in advance as calculated in the membership fee account, expenses paid in advance for insurance, accrued expense honorarium as given. Under nominal account section, we are showing now the income and expenses accounts, membership fees, which is income calculated from the subscription fee account, the entrance fees as adjusted, credit losses as shown in the membership fee account, profit on sale of refreshment as calculated from the trading account of the refreshments, donations as shown in the statement of receipts, stationery from the statement of receipts, insurance from the statement of receipts, profit on sale of magazine as calculated, affiliation fee, honorarium, and rent paid. This is the post-adjusted trial balance. Now we will have to take the nominal account section to present the income and expenditure. From the nominal section of the post-adjusted trial balance, the income and expenditure account was drafted as follows. On the income side, on the credit side, we have listed the income after they have been adjusted by including all income that was owing at the end of the financial period and excluding income that has been received in advance. For the expenses on the debit side, we have included the expenses that remain unpaid at the end of the financial period and excluded expenses that were paid in advance. And the account was balanced off by calculating the surplus that must be transferred to the account accumulated fund. The account can now be converted or translated into a statement as follows. Starting with the heading showing the name of the club, Diners Club, the name of the statement, statement of income and expenditure, and the financial year end being the year ending 31st of December 2010. The income and expenditure will have the two sections being the income and the expenses. In the income section, we will list all the income accounts as they were listed in the income and expenditure account. The expenses will also be listed as they were listed on the debit side of the income and expenditure account. The statement will then conclude with the surplus to accumulated fund. Note the difference between the account and the statement. The account concludes with a balancing figure that must be transferred to accumulated fund. The statement concludes with a surplus to accumulated fund account. Before we can draft the statement of financial position, let us recapture on the statement that we have completed. We've completed the receipts and payment statement using the cash basis. What it means is that the accounts that were listed under receipts It's all income that has been received and banked. It excludes any income that remain owing at the end of the financial period. On the payment side, we have listed all the expenses that were paid during the year, excluding payments that were outstanding at the end of the financial period. The second statement that we completed was the statement of income and expenditure, which was presented using the accrual basis, meaning that the income, as they were listed in the statement, included any income that remained owing at the end of the financial period, excluding income that has been received in advance. Under expenses, the expenses that were listed here included all expenses that were in arrears, excluding expenses that were paid in advance. In presenting the statement of financial position, it should clearly show the name of the club, the name of the statement, and the date at which the statement is presented, in this case as at the 31st of December 2010. Please note that the financial position of an entity is determined at a point in time. That is why the date is expressed as at a particular day, not a year. Clearly reflect the following on your statement: your assets, and under your assets, the two types of assets being your non-current assets and current assets. The second section will be your owner's equity and liability. Under this section, clearly reflect your owner's equity, your non-current liability. In this case, we didn't have non-current liability for the exercise. I excluded it. Then lastly, your current liability. Starting with your assets, and under your assets listing first your non-current asset. In this exercise, we didn't have property, plant and equipment. The only non-current assets is the fixed deposit as recorded in the statement of receipts and payment. Under your current assets, we have inventory as reflected from the trading account. Prepaid expenses are current assets calculated while presenting the income and expenditure statement. Accrued income calculated in the subscription fee while presenting the income and expenditure. The bank closing balance as calculated from the statement of receipts and payment. Petty cash as shown as a closing balance in the statement of receipts and payment. Then moving on to the owner's equity section. Accumulated fund, which is calculated as your surpluses or losses, adding any item that was capitalized. We had entrance fee that had to be capitalized, therefore entrance fee has been added to the surpluses that were calculated from the income and expenditure statement, giving us a total of 21,150. The bequest, no transaction affected the bequest during the year. The amount remained the same. Co-sponsorship is shown from the statement of receipts and payment. Moving on to the current liability, we have income received in advance, membership as calculated while presenting the income and expenditure statement, accrued expense for honorarium as a current liability also reflected on the statement of financial position. The asset total corresponds to the total of owner's equity and liabilities. In this topic, please ensure that you are able to draw up the trading account, the subscription fee account, the receipts and payment, income and expenditure, and you are also able to draw the statement of financial position. Work through this activity. According to this activity, you are given the two financial positions at the end of the financial period. Is the statement for the previous year and the statement for the current year. You are also given the the statement of income and expenditure for the current year ending 31st of December 2012. In this activity, you are also given the additional information that you need to use and consider. And then you are required to draw up the following: the subscription fee account showing the breakdown of amounts banked, the bar trading account, the accounts payable, the accumulated fund account, the rent account, and to prepare the statement of receipts and payment. Thank you.